Bitcoin is a cryptocurrency. That means it's not tied to any particular central bank or any particular country. Instead, it's managed by a distributed algorithm. Computers all across the world maintain something called a blockchain, and all of the chain of trust is maintained in that blockchain. Now, for paranoid people, Bitcoin is very attractive because it's anonymous. You can't link your ID on Bitcoin with your real ID. Now, personally, I would never invest in Bitcoin or any other cryptocurrency for that matter. So to see why, let's look at the problems with Bitcoin. There have been some really abysmal reports on Bitcoin in the media. Particularly annoying was a story reporting that Bitcoin was worth more than gold. Reporters would trot out this graph showing the price of Bitcoin and the price of an ounce of gold, and they'd show that one line was crossing the other. Here's the same story on the BBC and in many other news outlets. The other kind of story which is misleading is where they talk only about the return on Bitcoin, which admittedly has been very high. So let me tell you why these stories arouse no interest in me whatsoever. Investors should concern themselves with the risk as well as the return of each asset class. And if we look at the risk of Bitcoin, this is the volatility since 2014, we can see that it's extremely high. In this graph, the riskiest assets are at the top and the lowest risk assets are at the bottom. You can see that most developed market currencies have a volatility of about 10%, and that means that in a typical year, their price would move up or down by about 10%. Gold is a little bit more risky at 14% volatility. Developed market equities such as the FTSE 100 will give you a volatility of around 15 to 20%. Emerging markets will be a little bit higher, between 20 and 25%, or maybe even 30%. Oil's the highest volatility of the normal asset classes at around 35% per year. But Bitcoin is by far the most volatile, by far the most risky. Its volatility is twice that of oil, and almost 7 times that of a normal developed market currency. Now that's what the reporters should be talking about, as well as the return. And it puts it way beyond any kind of risk I'm willing to take with my life savings. But volatility isn't the only reason I'd never invest in Bitcoin. Oh no. If you look at the website coinmarketcap.com, you'll find 200 and more alternative cryptocurrencies. Bitcoin's currently the largest, but there are many alternatives. So there's no reason why Ethereum, Dash, or any of the other competitors couldn't overtake Bitcoin and turn it into the Betamax of the cryptocurrency world. That's the danger with any disruptive technology. It may itself become disrupted by competitors. More worrying from Bitcoin's point of view is that central banks are also looking at creating digital currencies. Here's a call for abstracts for a conference run by the Bank of England in 2017. If the Bank of England were to issue a digital currency, that would blow Bitcoin out of the water. It would be very hard to compete with a central bank's digital currency. One of the philosophical principles of Bitcoin is that it doesn't require you to trust a single counterparty. Bitcoin is based on cryptographic proof, in other words, solving hard computer problems instead of having to trust a counterparty. Or at least that's the idea. If you look at the plumbing behind Bitcoin, what you find nowadays is that it's dominated by 4 very large Bitcoin miners. Between them, they make up 54% of the transaction checking system, or the hash rate, of Bitcoin. So in other words, instead of having one big brother, you have 4 big brothers. So far from being a distributed system, it's now fairly centralized in these 4 large companies. And collectively, they could choose to block, reverse transactions, or even change the entire Bitcoin protocol. Then there's the problem with criminals. Because Bitcoin provides anonymity, it draws a wide range of shady characters into the cryptocurrency. The cryptocurrency is widely used by criminals for things such as ransomware, where someone takes over your computer and forces you to make a payment to unlock your computer, or money laundering, or selling stolen credit card numbers, or payments for illegal drugs and weapons. Personally, that's not the kind of company I want to keep. Then there's the problem with exchanges. If you want to convert your money from cryptocurrency back into normal currency, you have to go via one of these exchanges. Now, many of them are unregulated, and as a result, there have been some very large scandals where large amounts of bitcoins have simply disappeared. While the system remains unregulated, that remains a danger. But to some extent, all of those problems can be overcome. The primary worry for me is regulation. To give an example, when China clamped down on its capital controls, Bitcoin exchanges were very tightly regulated, and as 98% of the Bitcoin exchanges were in China, there was a dramatic fall in the value of Bitcoin. A pair of brothers called the Winklevoss twins tried to create an exchange-traded fund for Bitcoin. If you look at the SEC ruling, it provides a real insight into the problems with Bitcoin. And again, when that was rejected, the value of Bitcoin fell very sharply, coming as it did with China's regulatory clampdown. You can find the ruling on the Winklevoss Bitcoin Trust ETF on the SEC website. Naturally, the SEC is trying to prevent fraud and to protect investors. They stipulate that the ETF would have to satisfy two criteria. It had to have some kind of surveillance sharing agreements with the markets which would trade ETFs, and secondly, those markets have to be regulated. The primary problem was the unregulated nature of Bitcoin exchanges, and that leaves Bitcoin open to manipulation or fraudulent activity. Mark T. Williams wrote one of the letters to the SEC advising them about the problems of allowing the ETF to be created. He points out that many of the exchanges are based in places such as China, Singapore, Hong Kong, and Bulgaria, and also that many of the exchanges have gone out of business, and in many cases that's resulted in multi-million-dollar losses. And my primary worry would be that Bitcoin would be successful, because this in itself would lead to failure. Governments in developed countries have certain powers. They control the military, they control the creation and maintenance of law, they control the collection of taxes, which they use to fund their activities, and they control the creation of money and the maintenance of stable money. If you try to take away any of these powers, it usually results in tears. It really is like taking sweets from a baby. Ultimately, all currencies are based on faith. A US dollar only has value because we believe it has value. And when that faith disappears, you get hyperinflation, as happened in Zimbabwe, hence the $100 trillion Zimbabwean note. But personally, I do have a faith in the UK Parliament. I appreciate that the Tin Hat Brigade may have issues with trusting the government. The Bank of England has huge resources behind it to maintain the stability of the pound. The Monetary Policy Committee exists purely to maintain this stability. And okay, they're not perfect, but generally they do a very good job. So that's why I put my faith in the pound and not in cryptocurrencies. Remember, this is not a recommendation. Seek independent financial advice if you're thinking of investing in cryptocurrencies. Now, maybe you think we've got it wrong. You think Bitcoin is fantastic, or maybe you've lost money with Bitcoin or another cryptocurrency. If so, why not tell us about it? We'd love to know. Tweet us at PensionCraft, message us on Facebook, and if you like these videos, subscribe to our channel.